It's 11:30 p.m. on a Tuesday. You're staring at your portfolio, and then you look at the headlines. Nvidia is up another 4% today. Your cousin, the one who still borrows your Netflix password, just texted you that he made $5,000 on some crypto coin named after a fermented cabbage. Meanwhile, you're sitting there holding a sensible dividend stock that's moved exactly 42 cents in 6 months. My name is Alex, and I spend way too much time thinking about how to structure portfolios that don't just survive the next decade, but actually define it. If you're someone who feels like you're constantly chasing yesterday's winners and wants to actually get ahead of the 2030 curve, make sure to hit that subscribe button and give this video a thumbs up if this helps you out. Here's the thing. Most people are investing for next Tuesday. We need to be investing for 2030. The gap between where the world is today and where it will inevitably be in 6 years is where real wealth is generated. It's not about guessing what the Federal Reserve does next month. It's about identifying irreversible trends. The hardest part isn't the math, it's the psychology. We are wired to react to immediate threats, a tiger in the bushes, or a 2% market drop. We are terrible at processing exponential growth over long periods. But today, we are going to override that programming. I'm going to give you 18 high-growth sectors and specific stocks that are building the infrastructure of 2030. Let's get to work. Look, we have to start with AI, but I'm so tired of hearing about the gold rush. You know the analogy. During a gold rush, don't dig for gold, sell the shovels. Right now, the entire world is trying to build synthetic intelligence. That requires computing power on a scale we can barely comprehend. Sector number 1 is semiconductors. Here's a stat that should scare you or excite you. According to some estimates, AI data center power demand could jump 160% by 2030. We aren't just building chips, we're building the engines of the future economy. Obviously, you watch Nvidia. But the real chokehold? Taiwan Semiconductor Manufacturing Company, TSM. They make almost all the advanced AI chips in the world. They are the only toll road into the AI city. Until someone else can build a foundry that costs $20 billion and actually works, TSM owns the asphalt. Sector 2, cloud infrastructure. If chips are the engines, the cloud is the chassis. AI models don't run on your laptop. They run in massive server farms owned by 3 landlords: Amazon, Microsoft, Google. They are the digital landlords of 2030. Every startup, every enterprise, every government agency deploying AI is paying rent to one of these 3. You don't have to pick which AI software wins if you own the land they all build on. Sector 3 is where AI gets physical: industrial automation. We have a massive labor shortage in manufacturing that isn't going away due to demographics. We need robots. The math is simple. As wage inflation continues, the ROI on a robot that runs 24/7, doesn't take bathroom breaks, and doesn't unionize becomes undeniable. Companies like Rockwell Automation, ROK, or Emerson Electric, EMR, aren't sexy. They don't have explosive earnings calls. They just quietly provide the nervous systems for every modern factory on Earth. They are the definition of a 2030 infrastructure play, genuinely wanting to help people succeed. And finally, Sector 4 in this grouping, cybersecurity. Here's what most people don't realize. As we connect everything to AI and the cloud, the attack surface area doesn't just double, it squares. Cybersecurity is no longer an IT cost. It's a mandatory tax on doing business. If you don't pay it, you don't have a business. You want leaders here. Palo Alto Networks, PANW, and CrowdStrike, CRWD. They are building the immune system for the digital age. And in 2030, the world is going to need a very strong immune system. Okay, let's talk about energy. This is where people lose their minds and let politics ruin their portfolios. Forget what you feel about climate change. Look at the economics. The transition isn't happening because it's nice. It's happening because it's cheaper. The cost of utility-scale solar has dropped nearly 90% in over a decade. It is now the cheapest electricity in history in many places. Sector 5. Utility-scale renewables and storage. The money isn't in residential rooftop solar, it's in massive utility projects. Next Era Energy, NEE, is the giant here. They are technically a utility, but they are really the world's largest developer of wind and solar. They have the scale to bulldoze obstacles that smaller players can't. But you can't plug a 2030 power source into a 1970s grid. Sector 6 is grid modernization. We have to rebuild the entire electrical nervous system of the Western world to handle intermittent power and EVs. This is a multi-trillion-dollar construction project that will last decades. Companies like Eaton, ETN, or Hubble, HUBB, make the boring stuff, switchgear, transformers, that makes the grid smart. You literally cannot have the energy transition without their hardware. Now, some of you are going to hate this. Sector 7. Nuclear energy. Look, if we want reliable 24/7 carbon-free power to run those AI data centers I mentioned, wind and solar can't do it alone. The math doesn't work without baseload. Nuclear is the only dense, scalable option. Public perception is shifting, and governments are waking up. The simplest way to play this is the fuel source, Cameco, CCJ. It's the largest publicly traded uranium producer. If the nuclear renaissance happens by 2030, Cameco is sitting on the most valuable rocks on Earth. Sector 8. EV infrastructure. I don't care which car company wins. Tesla, BYD, Ford, doesn't matter. By 2030, millions more EVs will be on the road. They all need to charge. We have to replace 100 years of building gas stations in about 10 years. The companies that own the charging networks or build the hardware are the real estate play of the decade. All right, let's shift gears to the most precious asset you have, your body. Healthcare today is reactive. You get sick, we try to patch you up. 2030, healthcare is predictive and preventative. Sector 9 is gene editing. This is the frontier. We are learning to read and write the software of life. We already have approved therapies using CRISPR technology for things like sickle cell disease. This isn't sci-fi anymore. By 2030, we could be curing genetic diseases that have plagued humanity forever. Companies like CRISPR Therapeutics, CRSP, are high risk, yes, but the potential upside is uncapped. Sector 10. Targeted oncology. The days of slash-and-burn chemotherapy that kills everything are ending. We are moving toward personalized medicine, drugs designed for your specific tumor's genetic makeup. This is where the massive R&D spend in biotech is flowing. Sector 11 is digital health integration. The healthcare system is bloated and inefficient. It desperately needs the same digitization that happened to finance 20 years ago. I like the back office players here. Viva Systems, VEEV, provides the cloud software for the entire life sciences industry. They manage clinical trials, regulatory data, everything. They are the operating system for drug development. Let's speak about money itself. If you are still carrying a physical wallet in 2030, you're going to look like someone carrying a pager today. Sector 12. Digital payments and rails. The friction of moving money is disappearing. Now the incumbents, Visa and MasterCard, are incredible businesses. They are the toll booths of the global economy. But keep an eye on the infrastructure layers that are making international payments instant and free. That's where the next layer of value is. Sector 13. Next-gen logistics. E-commerce isn't done growing, but the expectations have changed. 2-day shipping will seem slow in 2030. We want it in 2 hours. This requires massive investment in automated warehousing located closer to city centers. The industrial REITs, real estate investment trusts, that own these strategic locations are sitting on gold mines. Sector 14. Spatial computing and gaming. Gaming is no longer just for teenage boys in basements. It's the dominant form of entertainment and social connection for the emerging generation. By 2030, the lines between digital and physical reality will blur. The companies providing the 3D engines, the tools to build these worlds are the infrastructure plays. It's not about which game wins, it's about who owns the physics engine of the digital world. We have to end with a dose of harsh reality. The world of 2030 isn't just going to be faster and digital, it's likely going to be more fragmented and resource scarce. Sector 15, Aerospace and Defense. Global peace is, unfortunately, not a growth sector right now. Geopolitical tension is rising. Nations are rearming. This is a non-cyclical trend. Defense contractors with deep government ties and advanced technology, hypersonics, autonomous systems, are, sadly, necessary components of a 2030 portfolio. Think of it as portfolio insurance against global instability. Sector 16, Water Scarcity Solutions. You think oil is valuable? Try living without water for 3 days. Climate change and population growth are making fresh water the ultimate scarce resource. Companies that specialize in water filtration, desalination, and smart metering technology, like Xylem, XYL, are solving an existential crisis. Sector 17 connects to that. Next-gen agriculture. We have to feed an estimated 8.5 to 9 billion people by 2030, with less arable land and wildly unpredictable weather. The old way of farming doesn't work anymore. We need precision agriculture, using data to maximize yield, and advanced seed technology. This is sector where biotech meets dirt. Which brings us to Sector 18. It's not a single industry, it's a theme: resilience. In the 2010s, companies optimized for efficiency, just-in-time everything. The 2020s taught us that breaks down. The winners of 2030 will be companies that optimize for resilience, redundant supply chains, onshore manufacturing, robust digital defenses. This is a lot of information, I know, and right now your brain is probably trying to find reasons why this won't work. It's too expensive right now, or what if there's a recession next year? Here's the truth. There will be a recession between now and 2030, probably two. The market will crash at some point, and that is exactly when the average person panics and sells, and the 2030 investor doubles down on these trends. You are not buying a lottery ticket for next week's earnings report. You are buying ownership in the inevitable future. Stop letting the headlines dictate your financial future. Pick 5 of these sectors that you understand. Find the leaders, dollar cost average into them, and then, and this is the hardest part, do absolutely nothing for 5 years. If this rewires how you think about the next decade, hit the like button so the algorithm knows people actually care about long-term thinking. Subscribe if you want more deep dives like this. I'm Alex. Start building.